The World Bank cut the economic growth forecast for Kenya to 5.5% this year, citing the prevailing drought, sluggish private sector credit growth, and rising prices of oil. Kenya's economy is estimated to have expanded by 5.9% last year. The general election around the corner, the political temperature in the country is rising. This is making the business community to adopt a wait-and-see attitude and delay investment decision, which is likely to affect the projected growth this year.
That we shouldn't lose lives, we shouldn't lose property, because at the end of the day, when election is done, this we can't get back. It will be lost and lost. And so that's why we are pushing the peace pledge to say, compete, but don't destroy.
Reduced lending by banks is posing a huge challenge to especially small and medium enterprises, because banks might not extend loan facilities, which may be an impediment to business operations. In their quarterly CEO Business Confidence Survey, the Kenya Private Sector Alliance says the growth for this year will be driven by energy and ICT sectors at 67 and 63 index point respectively.
Business confidence is actually very optimistic. And we have sectors that are more optimistic than others. There's some which are middle, there's some which are not doing as well, and there are good reasons. You know, when you look at energy and ICT, they're the most optimistic, and because that's, I think there's been a lot of, and you can see even in terms of investments, a lot of the people are investing around those sectors.
The sectors with lukewarm confidence are financial consulting services, tourism and manufacturing, while the least optimistic sectors are banking, microfinancial institutions and transport sectors.
Takes a lot. You know, take for example ICT. For me to begin an ICT company, there's so little I need, even in terms of space, land, and all that. Manufacturing takes a lot. You know, even the permits you need and all that, and that takes long. And so that could contribute sometimes to the slow growth. So it's growing, but not growing as fast as it should.
On the job front, 40% of CEOs expect to see capital expenditure increase, where 30% expect to see hiring increase in the next 6 months in the ICT and energy sectors as compared to the other sectors.